Morning. Morning, Miguel. Good morning. Vu. Morning, Justin. Morning, PG. Man, the people in UNH have a real headache, huh? XLV looks pretty rough, too. I was noticing that. Lily was another one that's not looking too hot. MRK looking pretty horrible. This is why you don't go cherry picking stocks below the 200. It's a good reminder. A damn good reminder. Is there a play on UNH? Yeah, there's a play on UNH. You want to know what it is? Leave it alone. That's the play. Don't go buying this dip. Leave it alone. It could be bottom, right? But how do you know that, right? You're just totally guessing. Unless you love UNH and it's something that you plan on holding for the next decade, right? But the thing is it can go lower, right? Focus on things with momentum. Focus on stocks and leading groups. Focus on things with earnings and sales. Focus on things with clean technical setups you understand. UNH doesn't fit the bill. I mean, I don't understand. What about UNH people find attractive right now? There's zero momentum. Just bound to give you a humongous headache. No, this is extended, my friend. Yeah, this NutX used to be 75 cents. I mean, this is gone. I mean, I know it was on earnings, but we're a little gone here. It's not that special. It's not that special. I would say be cautious adding too much exposure here. Let the market digest some of this massive move, right? What have we had lately? We've had, look at like Okta, look at names like Zscaler, look at names like even CoreWeave before yesterday's earnings, right? Look at your Palantirs, your Ubers, your Hood. Like stocks have just been going right up the right-hand side with zero consolidation, right? It's not very healthy. So it's not that it's not very healthy. I take that back, but like when you look at charts like Rubric, right? Like how do you buy this thing over all-time highs? By the way, I had this thing on watch right at all-time highs, but the problem is I need the chart to build some right-hand side. Like I'm not going to buy this thing after it's gone up 67% in 25 days and then just to catch a little 7% scored higher, right? Like, no, thanks, right? I need it to oscillate, build out the right-hand side of the chart. I mean, it's clearly in an uptrend, but I'm not chasing stocks, right? And this is just a full-on, 75% in 27 days. That's a chase, right? And if you did that, you're getting caught in a little gap down. So you've effectively given up yesterday's move. If you bought this thing at 80, you're up, $2.50. I mean, it's just not the best scenario. And it's the same thing with like a Z-scaler, right? Again, just recently broke out of a base, but I thought it needed a little bit more tightening under 217. And then, it's not the only one. I mean, there's a massive list of names doing just that. Like SE was another one. Like, again, yeah, I wanted it over all-time highs, gapped up on earnings. But, at this point, it had already made a 50% move. And buying it just for another 10%, I don't know. It's tough. It's tough. Even Palantir, right off the bottom. I mean, we're talking 100% move to highs. So, yeah, no, even MSTR, guys, look at this thing. It went up 80%. 5 days of sideways just isn't enough. It needs to build out the whole right-hand side of the chart. It needs a whole real form of consolidation, ebbing and flowing. Like this isn't considered a high type flag. This is 5 days of sideways. It's not enough. You want the Bill O'Neill classic 3 weeks type pattern. That's what you'd rather have. The Bill O'Neill classic 3 weeks type pattern. At the very least. Stock Maniac. What criteria do you usually follow to decide whether using the 10 or 20 MA as your trailing stop? And in which scenarios would you go as far as the 50 or even the 200? Yeah, great question. So typically a stock decides that, right? Now, the faster the ADR, the tighter the stop moving average I use. So if a stock is like a, 7-8% daily mover, I'm going to be using the 10-day. But if it's a little bit slower, call it like an Uber, I'm using the 20-day. And then once a stock pulls back and then pops right back up, then I'm using that higher low as my trailing stop, right? So, it could even then break the 10-day if it's a faster mover. But as long as it's above that higher low that it pulled back on the daily, like let's say it pulled back, found support on the 10, popped back up, pulled back again, broke the 10, but now, the 20 has kind of caught up to that last higher low spot, then I'll use that last higher low spot. So it then becomes the 20. And then if the stock continues just trending higher, then, as soon as the 50 catches up and this thing continues to build higher lows, I'll use the 50. So I want to not widen my stop, but the stock will decide, what moving average I get to use through its own price action. But if it's a slower stock and I'm buying it as it's incredibly tight, then I'm using, sometimes the 50 SMA right off the bat. So like something like Tesla, I believe that, it could have very well bottomed in here. I'm not sure. But when I bought it going right through the 200, right in the back of mind, I know I want to use that 200 as my guide. Like, yes, if it gets extended, to 400, 420, something like that fairly quickly, I'll be using, that to peel some into strength. But I'll want to use the 200 on a great name like Tesla, right? I mean, if they start to hit robo-taxis and humanoids, and I've got a 292 average, and this thing's at 400, 410, 415, 420, right? Why would I want to get rid of this thing, right? I mean, I bought it right at the 200. By the time I go to get stopped out on the 200 again, it's going to be much higher, and I could potentially catch a really, really awesome move. So don't want to micromanage my trades. It really just depends where I bought them, and how they're individually acting. Thanks. Yeah, people, she's like family. We've known each other for 5 years, basically trading together and talk every day. So he's super good people. One of the good ones. Yeah, I've known him for many years now, trading together, basically sharing a gazillion ideas. He's one of those aliens, man. He's not only a super good trader, he's also a business owner, multiple businesses. So it's kind of crazy how he can do so much. Do I use hard stops on moving averages? Yeah. So like I kind of mentioned to Stock Maniacs, there are times if the stock pulls back and finds support on the rising 10, and the 10 was my stop before, but then the 20 begins to catch up, I actually move my stop up to that higher low. Like I don't really think about the moving average too much more. If the stock bounces from there, then, I get the chance to use the 50, then I'm using the 50. So I'm basically trying to, trail that moving average, but give it its level. Like it might build a certain level, right? And it might not really be the moving average, right? So I'm trying to let it respect that lower boundary if it builds one. Yeah, I saw CELH already. Looks good. CELH looks good. I don't know that it's in a real uptrend per se, but it does look good. It looks like it kind of finished going down, which is important. Built the stage 1 base, got back up above the 200. Definitely some positives there for Celsius. PAGS as a sympathy play to Sezzle. Well, one, PAGS isn't even moving on its own earnings, so nice consolidation, but has to get going here like today. And the problem is I don't really like how extended the market is here without digestion, right? Like I said, look at the best names in the world, right? Look at NVIDIA, look at Tesla, look at Microsoft, look at Palantir, look at MSTR, look at Uber, Hood, look at Rubrik, look at the other cybersecurity name, OKTA, right? Look at Zscaler. I mean, guys, names are just gone and they haven't built the right-hand side of their charts. Like, what exactly is supposed to power the market higher here? Either complete FOMO, V-shaped recovery into new all-time highs. Like, is that what we all want? We want a V-shaped recovery off the lows into all-time highs, COVID style. I mean, that doesn't seem too healthy to me. That doesn't seem healthy at all. So, the best names in the world need to take a breather. That's just the reality. I know people don't want to believe it. So they look at their favorite stock in the world, whether it's NVIDIA, and they go, oh my God, XYZ's got to play catch up. I mean, recently all semiconductors have been pretty good, right? But you'll look at your favorite stock in the world and then you think that other one's got to play catch up. That other one that isn't moving while your favorite stock in the world is moving and maybe without you is a laggard. If it's not moving during this last month, if it's not up 40, 50% in this last month, it's a laggard, it seems like. Your issue is there are no names to trade. Everything is extended. I have remnants of 2 tickers of my portfolio, nothing for about a week. Well, it depends. What do you own? I mean, I know guys in the room who own a bunch of good stuff. Palantir, Hood, Zscaler, Uber, NVIDIA, Tesla, some MSTR, some have iBit, Baba. What else has been going? SE, Netflix. So, and I've got, some guys on CLS just like myself. So I have CLS, I have Crowd, I have Netflix, I have TMDX, I have Toast, I have Tesla, I have Uber, right? Those should just be trimmed and you should be trailing, right? You shouldn't be doing, TMDX. I also have it. So yeah, HIMS has been fantastic, but it's like just been straight up. Like, where is the sideways consolidation so it can like slow down and you can hop aboard, right? It doesn't really exist. So HIMS needs to slow down a moment, go sideways. This V-shaped recovery from 20s up to mid 60s, that's not healthy. I mean, it's fine if you're in it and trim and trail, but if you're looking to hop aboard, you can't just go buying it at 60s, guys. You need it to consolidate. Otherwise it's like you jumping off the top floor and hoping not to break an ankle. So what you really need is you need things to just slow down, consolidate, and you don't want to own the pieces of crap. So like Vu, when you say like, oh, you have no names to trade, well, that's the misconception when you're a swing trader, is that you have to click the button every single day. You don't have to click the button every single day. That's a lie. That's the misconception that, people get taught, or you may see your favorite day trader making money every single day and he's trading small caps. Okay, let him do him. And you continue to own your names from much lower and do you. Right? Like, there are very few buyable setups that I even had on the watch list last night. Why? Because there just aren't any. The market needs to go sideways. If the market can't go sideways, I won't go piling into stocks here. It's not even that market needs to go sideways. It's that individual stocks need to go sideways. I'm not going to go piling in the stock. Like, where's the right-hand side on GEV? Right? It broke to this little flat base and then just gone almost out to new all-time highs. I'm supposed to just chase this up here. I'm supposed to just buy this while it's up 30% from its 50-day and it moves about 3.5%, 4% per day. Yeah, no, not happening. Not on any planet, not ever. So, and that's the same story with a bunch of charts right now. And that's cool. Right? But when they set up and they digest and they pull back and they VCP and they tighten up, then we'll be ready to go. I'll be ready to act. But, not until then. I need to protect. I've had a really, really awesome last 5-6 weeks. So I need to protect what I've made more importantly than making more. Right? There are guys in the room who are up 20 or 10, 20, 30%, 40% in the last 5-6 weeks. I mean, you only need 2 periods like that all year long to have an awesome year. Literally. You only need to make 40, 50% every single year of your life compounded to be 100 millionaire by the time your life's over. It's like everybody wants to be 100 millionaire by next year. It's like, no, treat this as a career. Protect what you've made, wait for proper setups, execute on leading stocks with good earnings and sales in leading groups, clean technical setups that you understand. So without that, you're just out here chasing rubric and SE and Zscaler. Okay, cool. For what though? You know what I mean? Yeah, Ben, this is the kind of environment you do drag yourself out of a drawdown. This is that kind of environment. But now that you've dragged yourself out of the drawdown, now it's time to keep what you've made. And then when the market resets up, that'll be time to actually make progress on your portfolio. And then you have to learn to protect those profits too. And then the time after that, you'll make some more traction on your portfolio. Love it, brother. I'm here to help, man. Ask questions if you have them too. So it's good to see you asking questions. Marco, every chart I treat it for its own, right? So that's a tough question because I don't just have like some fixed number in my head, right? Like there are stocks like Tesla where I would rather give back my open gains and just trail it on an ascending moving average than to trim into strength. But, names like Palantir, names like Uber, names like Netflix, Toast, TMDX, right? We CrowdStrike, we've trimmed everything, right? Everything's been trimmed. So, sometimes what I like to do, what helps me sleep well at night is like when you get like a really nice 3 to 5 day push. So sometimes it could be like a 12 to 15% move. I trim half, right? If it goes higher, I still have half. If it drops back down, at least I sold half. So like no matter what, I feel pretty good about having sold half is normally the way I think about it. Yeah, Bitcoin's consolidating nicely, but just needs a little bit more time in my opinion. You go from 70K to 105K, you just need to slow down for a moment. Couple weeks of sideways. Go back and study Bill O'Neill 3-week type patterns. At least. That's like the least we need. Without that, we need Bill O'Neill 3 weeks type patterns out here. Yeah, I hear that. I'm more of a Zanger type. Part of the reason is because I want to trade stocks in leading groups with earnings and sales. Earnings and sales, it's not lost on me that stocks with no earnings and sales sometimes are the ones that make the biggest moves. But stocks that have good earnings and sales are the ones that give you the best duration, right? So the moves last the longest. They end up, yes, they don't give you, 400%, in 2 months, but they might give you, 1,000% in 2 years, right? So duration is important to my trading too. I want to just own the best stocks, right? I don't want them to move too slowly, but I just want to own the best stuff. Like even this Roblox, this is cool. You're talking 60% move in a month, a little over a month. It's just, where's the right-hand side of the chart? I mean, look at the chart history on this thing. When has it ever gone straight up like this? Almost never, right? Almost never. So let it take a breather. Things need a breather. Everybody's like, oh my God, I missed this rally. Oh my God, I missed this rally. And then they go chasing stocks and then they just go giving back the little bit of money that they did make during this rally. Or if they made no money during this rally, then they're really giving money back. Now they've gone through a rally. Like if you chase here and you haven't made money on this rally, you're going to end up losing money during this rally. And that's a fucking slap in the face. You shouldn't have lost money during this rally. If you then end up chasing and then end up losing money during this rally, you're going to feel super stupid. So just wait for things to set up properly. Don't lose money in this rally. It was almost impossible to do. Yeah, well, they're called shitco's for a reason, one, Corey. But not only that, they're laggards. So when the leadership does pull back, when you get a pullback in Hood, NVIDIA, Tesla, Apple, Microsoft, etc., the rubrics, the Z-scalers, when those start to pull back, right, the shitcos are going to get destroyed. At least that's what should happen. And that doesn't always happen, but it's usually par for the course. What short setups do I really recommend studying? Also, do you use any key parameters to avoid getting caught in a short squeeze? Yeah, I like to just, make sure that I'm trading, clean technical setups. I'm not like the way you get caught in a short squeeze is avoid stocks that are in uptrends. Focus more on stocks that are showing weakness during market strength. So in yesterday's watch list video, I was talking about the XLV. Right. So it's like you look at these like XLV and this broke April's lows. Right. So it's like, you start talking about names like Lilly, again, slow, but Lilly types. Right. And it's like you don't really have any headache when this thing gaps down on earnings and then just continues to fade. Gaps down, goes sideways for a little bit, and then just breaks out of these little inside days. Right. It might be slow, And I agree, but these are the kind of groups, things that are breaking down on earnings are stocks that I definitely want to make sure I'm focused on the short side. So, you're not really, how can you get caught in a short squeeze if they have bad earnings reactions? It's kind of my thinking. Names that break key moving averages. Again, similar, like I've been short this GRR for a while, right? It had to squirt up and then it posted earnings in after hours. And the very next day gave the whole move back, was resting right on its 50-day. The very next day I came in and shorted it, right? When it lost its 50-day. And then it's just been doing nothing, going down, going sideways. And while other stocks like Rubrik and Zscaler and Palantir, while they're up 100%, this thing has been going sideways. So what do you think is going to happen to this name when the market starts to roll over a little bit? You guessed it. The market had an inside day yesterday. The market literally went sideways yesterday, and GRR started getting its ass kicked, right? The market hardly goes down overnight, and this thing's gapping down, right? So it's like there are certain stocks out there that just are screaming they want to go lower. Do they? I don't know, but do I have a max pot percent stop in conjunction with max port allocation per trade? Depends. Some stocks, I buy more than 10%. Like a Tesla was just a touch more than 10%. Some stocks, that I felt like I was, that wasn't so proper for my entry 5% positions. When I first am getting my foot into the market, depending again on average daily range too. Like when I bought Netflix, it was like a 10% position because it was super slow mover. And then when I bought the very next day, I bought Palantir, it was like a 7% portfolio position. And then when I bought CrowdStrike and Uber, those are like 7 and 8% positions. So, it just depends how quickly they move. If I'm dealing with names that like naturally move a little bit slower, right, I want to get closer to that 10% when I'm first getting invested. But if the market was like already in a steady uptrend, this was just a beautiful setup. The stock's above, like the market's above the 200. I go to 10 and 15% positions. But when the market has just been getting beaten up and beaten up and beaten up, and I'm like just trying to re-dip my toe into the market to see if I can gain some traction, I start with 5%. So 5%, 10%, right? Again, ADR dependent. So if the market was super healthy and in an uptrend, Netflix could have been like a 15, 20% position right from the start. So, but again, Stock Mania, kind of getting back to your question, what setups do I recommend? You've got break of 50, simple moving average. You've got obviously parabolic short, which I don't really recommend for a ton of people to do. You've got just shorting stocks that are breaking down on earnings, high volume close setups that are stocks that are breaking down on earnings. What else can I think of? Bear flags if you want them. Like I remember I shorted AVGO bear flag. Didn't last for forever, but this was a clean bear flag. You get a move down, you just get a bear flag, right? Very simple setup. You get the MU types, which I also shorted. Just a little gap down on earnings. Had earnings, gap down. I shorted it right here. What else? Yeah, I use 50 SMA ATR extensions. I use ADR extensions, but yeah, some people use ATR because it calculates the stocks gapping up overnight too. Right, so it calculates the overnight gap as well. ADR, ATR, but yes, I do. You guys will hear Jeff's son talk about that. Jeff's awesome. So if you guys aren't familiar with Jeff, I highly suggest following him too. Yeah, my love. You have a muffin? Oh, yeah. Sounds good. I'll be right back, guys. I'm going to grab a little muffin. What happened? Steak and egg sounds amazing. Oh, blueberry muffin. Yeah, Google overcame the negative news on good volume too. Yeah. If Google can set up above the 200, I'm absolutely interested. Again, it depends where the market's at and how many great setups there are. Right, Google a little bit slower of a mover, but it depends. If I have some money, if I still have cash, I could definitely see myself wanting to own Google. Really nice. Mac, hi, are we getting a subscription to what? What are you talking about? Subscription where? Is it a gym membership or what? Let's say you take a setup and you only have a slight cushion or slightly in the red by the end of the day. Do you keep the position close? That's actually a great question because I've done both. And I've done both recently. And let me tell you, I did it on Soxal and on Amazon, and I'm an idiot. Okay, so let me give you two examples where I kept it overnight and it continued to work. And I'll also tell you why I kept it overnight. So I bought on the same day Tesla, right, as it was going through the 200. That same day I bought Toast on the earnings gap up, 40.81, and it closed completely flat on me, but I kept it because it was an earnings gap up. And then TMDX, right, and I bought it the very next day? No, it was the very same day, and I held it, but I had low of day stops on them, and they were earnings gap up, so I held them, and they've gone on to work from there. Okay, great. Let me give you two examples where I totally effed up. I had this SOXL because I was like, okay, I don't love any of the semis here, but I think that if the market's going to power higher, it's going to do so behind the backs of NVIDIA, AVGO, MU, Marvell, ALAB, CRDO, etc. So instead of buying an individual semiconductor and kind of trying to pick and choose which one would be the better performer, I just bought Soxel. Well, I literally bought 1376, and this thing squirted higher, and I was like, oh, cool, I'm up 50 cents a share, and then closed right at my average. Well, my stop was low of day, but I was just like, I was like, I'll cut it. I'll reevaluate tomorrow. The very next day, it goes totally sideways on me, and I was just like, well, it held what was my average, but it's not that, it's not really doing much. Well, over the weekend, you get the news, and you guys know the rest. I'm feeling like a total idiot, right? I had a 1376 average, and this thing goes yesterday to $19 in a few days. So here's another example. Amazon. I like this little flat base. Very, very similar to what NVIDIA had. And we were over the 50 simple moving average. I bought $193. Almost looks just like Soxel. Why? Because the market is highly correlated. So I bought this 193 with my stop at low of day, $4 stop on Amazon. No big deal. Size right. No problem. Closes week, I'm slightly in the red, right? The very next day, what does it do? Nothing. And I'm over here like, well, I'm glad I got rid of it. No big deal. Then you get the news over the weekend, and this thing's gapping up, and now it's at 208, and I had a 193. All right, so it's like I'd be up $15 a share, and probably would have trimmed some off into this 110 level, 112. Right, so moral of the story is size right, respect your stop. You have to know what your loss is before you get in, and normally your loss should be to low of day or prior low of day. Two examples went on to work, and part of the reason that I just held TMDX and Toast is because they were earnings gappers on positive reactions, right? Soxal and Amazon were kind of just like breakthrough key pivots, at least pivots that I thought were pivots. And then, in two examples, I violated my sell rule, which was low of day. And in two examples, I didn't violate my sell rule. When I didn't violate my sell rule, I was rewarded. And when I did, I was slapped in the face. and called an idiot, right, by Mr. Market. So, really the rule there should be follow your rules all the time. When you get in, you should have a premeditated possible loss. And I didn't. I paid the price. Or I did, but I violated my sell rule, and I paid the price on watching Soxel go up 40% without me, on watching Amazon be up 20 points without me. Massive gap up overnight. For Amazon, this is huge. Back up over the 200. I'd be in the complete driver's seat right now. Instead, I'm on the outside looking in. So, yeah, TTD is not, to me, attractive because it's under the 200. Right? I mean, it's up, almost 10 times its average daily range from the 50, but that's why that's not the reason I don't like it. The reason I don't like it is because it's below its 200 and a declining 200 at that. So it's got a lot more work to do. Love the volume that came in. I doubt that was my Aunt Susie. I'm going to have to give her a call and see if she was the one buying all this TTD, but I doubt it was. And, so clearly some big players came in for this thing, but I don't care. Let it get above the 200. What scenarios will I cut a position before your low day stop hits? When you're an idiot scenario, you should always follow your sell rules. I made the mistake of selling it too early, market trades, and I messed up, right? I paid the price for it. Can I check out TTAN? Yeah, real quickly. A little thin. 58 million bucks, recent IPO, building out a little flag. I mean, yeah, not bad. What group are they in? Could you tell me off the top of your head if you know? Needs to get going over, call it 128.60. 128.60 looks like a spot. I don't know what group they're in, though. If you could tell me, that would be cool. TTAN, I could look it up. Software application. I mean, it seems to be in the right group. Software's been booming. But yeah, market trades. In no scenario do I want to violate my sell rule. I should know my potential loss before I get in. And I just gave a couple of scenarios where I violated my sell rule and I'm on the outside looking in. And then the other scenario where I accepted my risk and I'm being rewarded. I mean, you win some, you lose some, right? You sold Tesla, Hood, Netflix, Palantir early, imagine. Well, that just means you violated the sell rules. Trim so you can get down to a trailer. Trim so that you're comfortable holding it on a rising moving average. Everything else, don't worry about it. Rising moving average. And if you're selling too early, it's very likely you put on too much size to begin with. And so you're uncomfortable to hold the pullback. And if you're not comfortable to hold the pullback, you have too much size. Period. I mean, that enough seems obvious. You know what I mean? How else? Why else would you sell too early? Well, because you didn't want to hold the pullback. TTAN software platform for trade workers. Oh, that's cool. Mad respect for trade workers too. FL? Well, FL's a buyout, so FL no good. I mean, I'm pretty sure they're supposed to be getting bought out at $24 a share. So they're just going to get here and then they're going to do nothing. They're going to they're just going to trade sideways like, ridiculous. Not even worth focusing on. Yeah, you should never get out too early. I would rather sell the last of my position into weakness, right? But 400% higher. Like, you just have to hold it. Like, that's all you got to do. SAP, I saw SAP on my scans actually. Yeah, it just needs a little longer. You know the issue with SAP? You call your grandma and tell her to buy it. You don't want to buy this. It moves 1.82% per day. You could probably make more money panhandling, dude. This is so slow. This is so slow. You don't want to do this. Again, nice chart, but unless here's a rule of mine. Unless you guys are trading with $100 million or more, probably, you don't need to be buying charts like SAP. It's just unnecessary. Right? Like, think about this for a second. This chart in 378 trading days to get to 300 bucks. 300 and where's the high here? 376 trading days. Is that right? A little bit more. Yeah, 378. It went up 128% in a year and a half of trading, more, since October 23rd of 2023. Right? You're talking like, what is that, 19 months? So in 19 months, this thing goes 100 and some odd percent, 120%. Palantir from the lows is up that in 28, effectively. It's up 128 trading days. Right? Don't kill yourself owning SAP. Yep. Yeah. Do I change my stop to break even after a few days? Or yeah. So if the stock moves like 8 to 10% away from my average, I move my stop to break even. I try to improve my worst case scenario right away. Literally right away. I try to improve it. So I take a lot of flat, small green, small red trades all the time. All the time. They're the most common trades for a swing trader. Get used to them. Right? I never take big red. Ever. Very, 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 very rarely do I lose like even more than 1% of my account on a trade. Ever. And it's like I haven't lost 1% on a single trade in the longest time. Even 1%. Sometimes I do, but very rarely. Like super rare. Right? Because I use progressive exposure, because I use proper position sizing, because I'm focusing on leading charts, because I do a great job timing my entries with a healthy and pushing market. There's a lot of small nuances, but guys, once you figure them out, the shit's not nearly as hard as everybody thinks. It's just like, you guys have a bunch of missing, it's like a puzzle and all the pieces are scattered, right? Like first you have to like flip the pieces over, and then you have to like, pair everything up just to like see, oh, that's the sky, that's the grass, this is the house. And then you start clicking everything into piece, and then all of a sudden it's like this beautiful portrait, and you understand it, and you're just like, oh, that's what this whole puzzle thing was. So it's like it just takes a little while to put all the pieces together. But once you put them together, it makes tons of sense. And I'm still wrong all the time, but I still do super well. So that's the difference. You could be wrong a lot as a swing trader and still make, an ungodly amount of money, right? Like some of my students, they're up, 30% in the last 6 weeks, 5 weeks, right? They only need like 2 periods like that all year to do 50%. Now then do 50% on your money for like 20 or 30 years. And you're $100 millionaire, no matter what way you slice the cake, right? Because we're not doing anything different. We're just compounding our money. Same thing over and over, on. Yeah, again, straight off the bottom, right, of 70% in a month, 29 days, a month and a half. But now we need what? We need some sideways, right? Super nice bounce back, huge volume near the lows, and then grind right up. And then now you need to build the right-hand side of the chart, right? That's all. That's what ONON needs, some right-hand side of the chart. Yeah, all these charts look the same. Everything's just V-shaped right off the right-hand side. It's not healthy at all. I mean, it's healthy. It's great. It just now needs some sideways. And I'm in a bunch of names that are doing this whole V-shaped thing, but now I want even my names to slow down a little bit. Can I give you a 10-second refresher on what a 620 is? Yeah. 620 setup is just a intraday entry tactic where basically you're looking at a 5-minute chart and you're timing it with like a daily. So a key level on the daily, and then you zoom in on a 5-minute and you get your 6-period EMA to cross back up above your 20. And the way it's described by Gil Morales is you also have MACD do the exact same thing beforehand, which is why you see some of these arrows on my charts, right? So if you zoom into the 5-minute, you'll notice some of these arrows. And, you know, when the arrow's pointing up, it means your MACD histogram had just crossed up. So like on ETN, right, you get the arrow pointing up, right? It means MACD crossed up, and then you get price breaking up above the 6 over the 20. So right in here would be your entry with your stop at low. And then obviously the rest is history for this thing. So, you know, 620 is just an entry tactic, but you got to use it in conjunction with other things too. It's not like some, you know, saving, you know, tool or, you know, God's gift to earth of, you know, that it's like some perfect entry tactic every time. It's not. So, yeah, my love. RGC is not building a flag. This thing lost 50% in a day. I mean, by the way, who cares what RGC is doing? This thing's clearly manipulated. Any stock that goes from 20s to 550 in that short period of time, you know, you shouldn't even have on your radar. It's how you blow up in either direction. This is how you either try to catch the bottom and pray for a move higher, or you end up getting blown out on the short side. Don't do it to yourself, Stonky Pits. What do I think about Mara for a short? If Bitcoin starts to come down, yeah, these are probably the ones that get killed. Mara, Riot, CleanSpark. You know, if you want the good ones, it's MSTR or coin. Otherwise, you know, you leave these you leave these Bitcoin miners alone. I mean, this is total trash price action. You mean Bitcoin's at all-time high and CleanSpark isn't even back to the highs of November? You know, come on. Yeah, so I agree with you. Mara's probably the one that gets killed. Yeah, there you go. Vu, thank you for posting that. Anyway, guys, thank you guys all for being here. It's 8:20. I got to get my ass ready for a stream in the room. Thank you guys all for being here. Bunch of you guys every single morning asking tons of questions. So I appreciate you guys. And I will see you guys tomorrow for our Friday. See you guys in 23 hours. Doug, thanks, man. If you ever got questions, be sure to ask.